what's going on? I'm Ryan Stewman, President, CEO of Closer Capital. And the number one thing that people ask me in my DMs about the lending industry is, why do banks not want to loan people money? And I want to clear some things up for the people that are on the outside looking in. It's not that the banks don't want to loan businesses or people money. It's that the United States government put such restrictions on how you can lend, what you can lend, and then you've got a nut. So let's think about the layers it takes for you to get a loan, whether it's for your business or for you personally. There are secured loans, which is like an automobile loan, an equipment loan, a mortgage on your home, right? If you don't pay, they can come collect something, a car, a house, a tractor, whatever the case may be. Then there's unsecured loans, okay, which means that a credit card would be an unsecured loan, right? It's not anything particular. It's just money that you use that they trust you to pay back. But if you don't pay it back, they have to take you to court or ding your credit, but there's no asset for them to reclaim. Now, I explain that to you because the second part of this equation, the non-asset-based lending, like a credit card or whatever the case may be, where there's no recourse to come after you, that's what most people need. Most people don't have a house free and clear they can put up at the bank to get a loan against to go do whatever they need to do. And so what happens is they need a loan against their own meritability, their own credibility, their credit score, their income for their business or their persons, right? The bank wants to give you that loan. The bank makes money off of the interest from giving you that loan. And if your loan is risky, then you get a little bit higher of an interest rate, which means the bank makes more money. Wouldn't they want to do that? Of course they do, but here's how the layers work. You have the government, they layer on some regulations. You've got to treat consumers this way. Banks can only do this much. Banks can only act this way. Here's Dodd-Frank. Here is the QM way that we're going to do lending for mortgages. Here's the non-QM, we're going to do lending for hard money. Here's the rules that go with that. Then on top of that, the banks have their rules. Okay, so the government says this. Then the banks say, on top of what the government says, here's an additional line of regulation, and this is the bank's chairman's everything else. Then the investors who fund the banks have their own set of guidelines, and they say, hey, we only want loans that look this particular way in this particular industry for this particular fund. And what happens is you get so much regulation and overlay and guideline, the guy sitting behind the desk at the local bank, he doesn't know his way to navigate around all that. And if you're not a perfect client with a shitload of money in the bank, they're never going to give you that loan. There's no asset to securitize it by, so there's nothing to come claim if you make a mistake, right? You don't have enough money in the bank to put up in a CD to get a loan against that. And if that was the case, you wouldn't need a loan anyway. So what happens is, as much as the bank wants to loan you money, it's almost impossible to loan people money these days. It's almost impossible to loan businesses regular traditional money these days because there's so many stipulations, overlays, and requirements. So how do you get money if you're a business owner? Well, smart entrepreneurs like myself have identified that this is a massive bottleneck in the industry. This is a massive setback because, listen, most of the wealthy entrepreneurs that we are seeing in America specifically right now are 55 to 65 years old or older, right? That wealth, everybody thinks wealth comes in your 20s and 30s. Wealth comes in your 50s, 60s, and 70s. And so we're seeing a lot of older people with wealth in our country. And the only way that we're going to build the next generation of old people with wealth is if we start investing in our 30, 40, and 50-year-old entrepreneurs right now. Well, smart entrepreneurs like myself see that this being a big problem. If we can only loan to the boomer generation, and we can't loan to the generation behind boomer, we can't loan to Generation X, we have to loan to the baby boomers, but Generation X gets skipped, then guess what happens? Then we're going to have an actual economical cycle where people that didn't get funded, that didn't get to go build their dreams, that didn't get the same opportunity as the generation before them just get skipped. And that could be devastational for our country, our economy, and everything else. So guys like myself see this, and what we do is we have two opportunities for people that banks can't compete against. Number one, we have non-QM real estate loan programs. And what I mean by that is QM is quantitative mortgages, and what that means is if they qualify, primary residence, blah, blah, blah. We do hard money, which means private investors, private individuals, no banking regulations, no government regulations. It's no different than if you went and borrowed money from Uncle Bob up the street and y'all wrote up a contract on his dining room table. That's how we do business at Closer Capital, okay? Because once you're not loaning to consumers, we loan to businesses only, not business owners, businesses only. But let me tell you, it's easier to get a loan from us on a business than it is for any big bank with 10 volumes of regulation up their ass before they can loan you $1. You come to us if it's a make sense deal. We got a handshake and a piece of paper, an agreement, and a credit pool. Dude, 72 hours later, you got access to the funds. See, myself and other smart entrepreneurs in the lending system see that was such a bottleneck that we created a fast lane to fast track the next generation of entrepreneurs. So if you're out there and you've tried to get money from Goldman Sachs, or you've tried to raise money from friends and family and they wouldn't invest in your product, but you know you've got something, you're making some revenue, you're growing, you're just hitting brick walls, you're struggling, you need somebody with capital, you need a partner to come in and put some infusion of some liquid cash into your business so that you can go acquire the things you need in order to grow and scale that thing. That's where Closer Capital comes in. We can skip the regulation. We're not looking for you to sign over equity to your company. We're not trying to take over your business partner and coach you or any of that stuff. We're a lending platform funded by private investors that gives you super fast access to the money you need at discounted prices so that you can go out there and scale your business to the next level. If you want to take advantage of this, find out what you qualify for, just click the link below or simply go to closercap.com and tell Linda that you came from this YouTube video so she gives you the secret handshake. You'll figure out what that is. So anyway, thank you for listening. If you know somebody who needs to hear this, somebody needs to understand this side of the regulation, how these things work, and that they don't have to just take the no from the bank. They can get a yes from us here at Closer Capital. Send it to them. We'll catch you on the next video.